We are continuing the chapter 19, adjustments in preparation of financial statements. Already we discussed 9 adjustments. So next one, you write the heading 10th one, manager's commission. From the name itself you can understand the meaning, that is the commission payable to the manager. So usually manager will be given a commission. That means when there is an increase in sales due to his efforts and all, we will be giving him commission. Again, that's a decision of the firm, and it is always computed as a percentage on the net profit. Net profit, you remember when we prepared P&L account, the balancing figure is termed as net profit. So on that net profit you will be computing a fixed percentage that's given as manager's commission. Okay, so manager's commission, below that subheading A you write manager's commission payable on net profit before charging such commission. You give the heading like this: manager's commission payable on net profit before charging such commission. That's the first one. Suppose if the question says like manager is entitled to a commission of 10% of net profit, and it is written like before charging commission. That's what we are going to discuss now. And we know that we have to compute this 10% on the net profit. Net profit is something which you will get from your P&L account. So from P&L account, suppose you got the net profit as 1 lakh. So what will be manager's commission? 1 lakh into 10%, just cut 1 0, your manager's commission will be 10,000. Okay, so this is the effect when it is computed on net profit before charging such commission. Understood? So we have one more situation, that is after charging commission. So now below this heading you write it as a formula. What is this 1 lakh? That's a net profit. So you write net profit into rate by 100 as a formula you write. That means directly you are computing that percentage on the net profit given. So net profit into rate by 100, that's a formula. Okay. Then the second one, subheading B you write manager's commission payable on net profit after charging such commission. Usually we will be getting the second case, that is after charging. So when it is after charging, the meaning is, suppose the same example we will take. 1 lakh is the net profit you earned for that year, and the question says like we have to compute on net profit after charging commission. Okay. Commission you have double M and double S. Okay. Yes, when it is after charging and if the net profit is 1 lakh, can we directly compute on this 1 lakh? No. After charging commission means first you have to deduct the commission from 1 lakh. On the balance you will compute manager's commission. But do we have the amount of manager's commission? No. It will be again given as a percentage only, like 10% and all. So 10% you can't directly compute on 1 lakh because it is after charging. First you have to charge commission. Charge commission means deduct commission. On the balance you have to compute. Okay, not directly on 1 lakh. So how will you compute that commission? Is it possible to compute commission? No, because commission can be computed only on net profit, and net profit what we have is 1 lakh. But anyways you can't compute directly 10% because it is after charging. So in this situation what you have to do is you have to multiply by rate by 100 plus rate. That means 10 by 100 plus 10, or we can write it as 10 by 110. When it is after charging commission, your formula should be net profit into rate by 100 plus rate. If the rate was 5%, how will you do the calculation? 1 lakh into 5, that is the rate. If it is given like 5%, you have to do 5 by 105, that is 100 plus rate should be the denominator. Understood? So, you give this heading payable on net profit after charging such commission, and you write the formula. No need to write this one, you write the formula instead, that is net profit into rate by 100 plus rate. And when to be applied this formula? When it is after charging such commission. Okay. We will work out one question based on this, that is exercise number 10, page number 19.71, the practical problem number 10. Okay. So, what is the first step you have to do? You have to read the adjustments, put a tick mark against items having adjustments. So, we have the first one, additional information or adjustment number 1, closing stock. Then rent was unpaid, so you put a tick mark against rent, and then general expenses. Then bad debts and provision is there, so you have to see whether you have existing bad debts and old provision. No, we don't have existing bad debts and old provision. So you just put a tick mark against debtors, because from debtors we have to deduct these. Then depreciate plant and machinery and premises, so those two, you plant and machinery and premises, you put a tick mark. Then manager is entitled to a commission. Yes, manager's commission is there in this question. Yeah, now manager's commission, the double effect is here it is coming as adjustment. Usually it will be given as adjustment only, that means outside the trial balance. So what you have to do is, the double effect is, first you have to show it on the debit side of P&L. That also you write with that formula. After you finish this second case, that is subhead B, after that you write there, first shown on the debit side of P&L. If you want, you just show one P&L and show it on the debit side, or write a sentence also. Okay, show on the debit side of P&L, that's one effect. Then where will you write, since it is payable amount, it should be shown on the liability side of the balance sheet. Understood? It's an expense actually. When it is paid, it's an expense. So, to commission we will write like to managers commission on the debit side of P&L, just like any other commission or any other expense. So, first you have to show on the debit side of P&L account, later you have to show it on the liability side of the balance sheet. Okay, that's the double effect of managers commission. So, for managers commission, what you have to consider is the net profit, no need to put tick marks and all. Then the last adjustment, fire broke out on 1st April 2020, destroying goods costing 20,000. Okay, that means you lost your goods due to fire. Loss of stock due to fire, no, the same thing. But you have to see the date always. It is on 1st April. When are we doing the financial statement? You see the first part of the question, that is the first sentence. You have to do trading P&L and the balance sheet for the year ended 31st March 2020, and now the fire happened on 1st April 2020, means the very next day. 31st March is the year ending, 1st April 2020 means the very next day, but it's the beginning of the next year. Okay, because it's a financial year. So, we are doing on 31st March, that time nothing has happened. So, should we record this particular loss in our books? No, it will be recorded only in next year. Okay, so no need to consider that transaction, ignore it completely. That's what you have to do. So, now we will start trading account. You give the heading. Trading and P&L or profit and loss account for the year ended 31st March 2020. So, as usual, you have to start with opening stock. See whether you have opening stock in the question. You have opening stock here for rupees 2,20,000. So, write that to opening stock 2,20,000. Then two purchases, always you have to see whether you have any purchases returns. Here we don't have any purchases returns, so directly you can write that purchases figure in the outer column. So it is 11,88,700. Okay, then on the credit side, see whether you have any direct expenses in the question like wages or fuel, power and all. Go through each and every item inside the trial balance. Then after that you have to go through adjustments also. So here we don't have any direct expenses. If you see, there is an item like carriage outwards, which is indirect, whereas simply carriage or carriage inwards means it is direct expense that you can record. But here there is no direct expense, so we will move on to the credit side. Write sales less returns if you have. Here we don't have any returns, so just write sales figure in the outer column, 13,45,000. Then on the credit side we have to write closing stock, take the amount from the adjustment. Closing stock, it is 1,24,500. Find the balancing figure. See whether it is a gross profit or a gross loss. Here we are getting a gross profit. So to gross profit carry down, the amount is 60,800. Write the totals, then we can move on to P&L account. Always totals must come on same line on both sides. 14,69,500, that is your total. Now we will start P&L, transfer that gross profit to the credit side. It's by gross profit brought down 60,500. Now we will record all indirect expenses. Sorry, it's 60, not 500, it's 6,800. Okay, now all indirect expenses and indirect incomes we will record. On the debit side, okay, just go through each and every item. Did you see one item like general expense? That is coming first. So to general expense, and it is having an adjustment. So write the amount in the inner column, 10,750. Then what is the adjustment for that? Outstanding general expense, which we know that it must be added. So outstanding expenses, O/S means it's outstanding. Outstanding expenses, here we have to add 1,500. So that's why we have put a tick mark against general expense. So immediately you have to read the adjustment, don't forget. Then the next indirect expense is salary, which is not having any adjustment. So directly you write to salary, 22,250. Then we have carriage outwards, which is an indirect expense. You must specify it as carriage outwards because simply carriage means it is carriage inwards. This is 4,000. Then next we have rent, for which we have an adjustment. Write the amount in the inner column. Rent amount is 9,000. Then we have an outstanding rent amount. So add outstanding 850. 850, so it is 9,850. Then what next? We have discount is there. Discount, nothing is mentioned, means it is discount allowed and it is an expense. So write it on the debit side. To discount amount is 11,000. Okay, with that trial balance items are over. You have to go through adjustments also. Stock, rent. Okay, the third adjustment, 4,000 to be written off as bad debts, that is further bad debts. We don't have any existing bad debts, so we will start with further bad debts. So 2 further bad debts and add new provision we will write. There is no old provision and all. So 2 further bad debts, 4,000. Add new provision. Provision we have to compute at the rate of 5%, and you will always compute provision on debtors less further bad debts. So here debtors is 3,20,000. Directly don't compute on this, you have to deduct further bad debts always, only the further bad debts. Into the rate you can do 5%. So the provision will be 15,800. So outer column we can write now 19,800. Then depreciate plant and machinery and premises, the rates are different, 10 and 2 respectively. So we will write to depreciation on plant and machinery 10%. So the amount is 17,500 for plant and machinery, and business premises it is 2%. Business premises means the building and its surroundings. Premises or premises, that's the building and its surroundings. So depreciation on business premises, it is 2% which you have to compute. So that is 6,900. Then the next one is manager's commission. But for computing manager's commission, and here it is after charging commission, so you have to apply the formula like net profit into rate by 100 plus rate, since it is after charging. So we need net profit first. For getting the net profit, first of all you have to finish your P&L. Then only we will get the net profit, that is a balancing figure. On that we will compute manager's commission. Okay. So that we can't write now. Then the last one to be ignored completely. So it is all adjustments and all trial balance items now we have considered. Nothing on the credit side. I mean gross profit we have written. Other than that there are no incomes. Now you compute the balancing figure. For this question you will be getting a net loss, isn't it? So net loss must be written on the credit side. You write by net loss transfer to, we are taking this particular item to capital account, the balance sheet. So the net loss here is 42,750. Okay, now we will discuss about the manager's commission. Here should we allow manager's commission? We had discussed like manager's commission to be computed on net profit. Do we have a profit here? No. So if it is a net loss in a particular year, no need to provide manager's commission. Understood? So here the question is actually over. No need to write to manager's commission on the debit side because it is a net loss. Suppose it was a net profit. Suppose your answer was like, I mean this is just an example, suppose you got the net profit as 1 lakh. What will you do? On this you have to compute the manager's commission. Here it is given like 5%, take 10%, I mean for easier calculation only, understood. If it is given as 5% in the question, you have to take 5%. This is just an example. So suppose the question says like 10% is the manager's commission. And if it is after charging, we have to do like 10 by 110. Okay. So this is how you have to compute manager's commission if it is given like after charging. And if there is a net profit in the question, here we don't have a net profit, so no need to allow. So we'll close P&L account, write the totals, and now you can close your P&L. So P&L total is 1,03,550. Yes. So now we'll start the balance sheet. As usual, you have to do, give the date, give the format always with the heading balance sheet as at 31st March 2020. Its liabilities amount, assets amount. We'll start with capital on the liability side since I am following the permanence order. Capital, it is 7,95,000, and since it is a net loss, you have to write less net loss 42,750. Then add drawings. See whether you have drawings in the question. Okay, we don't have any drawings in the question, so with this you can write the final amount in the outer column, 7,52,250. Write this net loss within brackets because it is negative figure. Then we have to write all current liabilities because we don't have any other non-current liability. So we will write other current liabilities like next what is given in your trial balance. You can move in that order itself. It is sundry creditors 1,06,500. Then you have bills payable 75,000. Okay, with that trial balance items are over. I mean the liability side. You have to go through adjustments always. Don't forget the second adjustment, rent outstanding, general expenses outstanding, all these must come here. So don't forget, if you move in that order you will not forget anything. You don't have to by heart also. And then general expenses outstanding 1,500. Then bad debts and all that will be deducted from debtors only. Manager's commission is there, but here we are not allowing since it is a net loss. But suppose if it was there, suppose you recorded 2 managers commission on the debit side of P&L, then managers commission must come here also on the liability side as a current liability. Here nothing to be done. The last adjustment we have ignored already. Yes, so with this your liability side will get over. Now on the asset side, start with fixed assets, which is the first fixed assets you have like plant and machinery, and it is having an adjustment. So write the figure in the inner column. We have put a tick mark no. So that's how we can identify 1,75,000 less depreciation 17,500. So write within brackets. Write the outer column figure 1,57,500. Don't write prefix for balance sheet items. The next one is premises or premises. That is again a fixed asset because buildings and its surroundings. So it's having an adjustment. So that also we will write in the inner column. Less depreciation 6,900. It's 3,38,100. Yes. So here it is 6,900. 3,38,100. The figures got deleted. Here it is 7,52,250 and it is 1,06,500. Sundry creditors will be like 1,06,500. This is rent outstanding. The other one is general expenses outstanding. Okay. Now on the asset side, next what we have to write is the current assets. Start with closing stock because you might miss closing stock since it is given as adjustment. This is 1,24,500. Then we have debtors for which we have adjustment. So write in the inner column 3,20,000. From that we have to deduct further bad debts, that is less further bad debts and less new provision. Both are adjustments, so we have to deduct both. Less further bad debts, the amount is 4,000. Less new provision, it is 15,800. So outer column it is 3 lakh 200. Then we have cash at bank and cash in hand. Cash at bank, it is 15,450, and cash in hand, that is 350. So with that, your balance sheet is getting over. But once again, you have to go through adjustments, check whether all adjustments are recorded. Stock we recorded, rent and general expenses, depreciation, bad debts, provision. The last two we don't have to record. Yes, so all these we have covered now. Now you can write the balance sheet total, see whether your balance sheet tally. It must tally, otherwise you have to recheck the answer. It is 9,36,100. Both sides you have to add and see. And again the total must be on the same line on both sides. Okay. With that, the question is over. So this is the treatment of manager's commission, but here we don't have to record that since it is a net loss. Otherwise, if it is after charging, you do net profit into rate by 100 plus rate. So work out this question.